what I'm saying now is there are signs, very strong signs, that these technical funds, or a number of them anyway, may have wised up, may have realized that they're the sucker sitting at a crooked poker game table, and not knowing that they're the victims. And that I think for some reason it's dawned on them recently, based on their behavior. Okay, they haven't sold on this recent sell-off that we've had in gold and silver, and this would be a time when the technical funds who had bought and drove the price up into September would normally have sold by now, and in reaction to the prices coming down below the moving average. Well, something funny's going on right now. They haven't sold. And if they don't sell, okay, then the game will change completely. I can tell you what has occurred, and there's been a big change in the last several months. Whether these technical funds are going to continue to refuse to sell to the downside, as I'm starting to believe for the very first time, if that happens, then the paper game is not going to be what it was in the past, and it may be the end of the manipulation. And if they continue to act that way, then the whole price mechanism, the whole price discovery, the way prices are set, has changed. And boy, that's a really big deal if that's the case.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back to Finance and Liberty and Reluctant Preppers. We have a legendary guest today, Ted Butler, renowned analyst in the precious metals and particularly the silver market, and founder of ButlerResearch.com, is with us today, which is Sunday, December 15, 2019. Ted, thanks as always for joining us.
Thank you, Dunnigan. Glad to be here.
I want to remind our viewers that you were the very first silver industry expert that I ever became aware of over a decade and a half ago when we were living in a different state, and I read with great interest your research reports that came out in a monthly publication that I received in the mail, and I became to know you as the guy who'd been around as long as anyone in the silver industry, and you have an extremely wide and loyal following. So if any of you have not yet met Ted Butler, you're in for a treat. Ted, we've got, as always, a lot of questions that have been submitted by our viewers ahead of your visit because they value your experienced perspective and your expertise. But I wanted to first touch base on one article that you wrote recently, because it touches on a topic that many of them asked about anyway, and that we've been asking some of our other guests about, and that's your article called A Missing Motive, published on December 12th, and talking about the Fed repo action and the speculation that so many people have had to be doing about what is this important and major reason that the Fed is taking such extraordinary action at this time. Can you let our viewers know what your analysis and what your thought processes are about that?
Sure. First of all, I probably know less about the repurchase market than most, and I don't at all proclaim to understand it deeply in any way. So my article was merely a speculation of tying in a potential motive, what set this thing off. It erupted roughly around September the 16th, 17th, and has escalated since then. And just coming at it from a different point of view, not getting into the mechanics of what it's all about, but why it erupted and on the scene. I see connecting another set of facts. The first set of facts being something has happened in the repo market to cause this tremendous hundreds of billions of dollars of Federal Reserve accommodation. Separate and parallel, perhaps, to that is an ongoing investigation by the Justice Department into precious metals manipulation on the COMEX by traders from J.P. Morgan. The connection being that the most reports that I've read have fingered J.P. Morgan basically as the culprit for initiating this particular episode in the repo market. And I think that there might be, speculation on my part, there might be a connection between the ongoing Department of Justice investigation into precious metals on J.P. Morgan and this repo thing, because the timing is just so uncanny, eerie, to quote a subscriber of mine. The last criminal indictment that the Justice Department announced was on September 16th, where they indicted three more employees of J.P. Morgan as manipulating the precious metals market. And that day, or the very next day, the explosion in the repo market occurred. And in thinking about it, it's 3 months ago now, it seems to me that there might very well be a connection, the connection being this. This is a very serious issue, both for the Justice Department and J.P. Morgan. And it looks to me like J.P. Morgan is fighting back against the Justice Department in their investigation and indictments of their traders, and is basically thrown a monkey wrench into the repo market to demonstrate to the Justice Department just how powerful and important that J.P. Morgan is to the financial system, and is basically fighting back. I don't know where it ends, whether all this stuff will come out or not, but the events are just so time-wise and principle-wise so uncanny that it just struck me that this is not just coincidence or happenstance.
Just so I make sure that I understand this and that our guests get a chance to hear it restated, you're thinking that J.P. Morgan is such a major player in the liquidity between banks that needs to, for the healthy functioning of the normal financial system, that when they start getting fingered by the DOJ for the indictments about criminality and criminal behavior and trading that was definitely happening in the gold and silver trading, that J.P. Morgan could be flexing their muscles and saying, "You mess with us, and we're gonna lock up the gears here," and the Fed having to step in and prove that no, we can keep the gears turning even without you, kind of thing. Just so it's this power muscle flexing between the two of them.
Absolutely, that's a great summary for my thinking. It's speculation, but it's reasoned speculation, and it's based on the facts. The facts of all on both the repo side and the precious metals investigation side are there for the asking, and I'm just connecting the two. That this may not be a coincidence.
It's interesting because so many different possible theories have been surfaced by various analysts, that one of the things that's the most remarkable to me about it, and perhaps to some of our viewers, is the number of things that are strange that are going on right now in our financial world. I mean, they said, "Oh, it's probably about Deutsche Bank because this, and this," and it happened the same day that Deutsche Bank sold off its last of this, and so therefore it might be undercapitalized. And J.P. Morgan came into that story as well, and on and on. So it's like, gee whiz, there's quite a few different stories we've heard, but one of the most telling things about that is that there's a lot that could go wrong if there's so many stories that could explain it that are happening at the same time.
No argument. It's look, there's something behind this. All we can see are, maybe smoke entrails. So it's you sometimes all you can do is speculate. You can't. We're not flies on the wall that know firsthand everything that's going on. You just have to look at the facts as we know them and try to make sense of them.
I wonder, because the other thing we heard from Danielle DiMartino Booth, a former advisor to the Fed of Dallas, who was on, talked about that these Fed, I don't know if you call them minutes or explanations or whatever notes that come out like 2 years later telling you who were the recipients of the liquidity that was needed. But I was just thinking about that. Your theory is if it were, for example, J.P. Morgan willfully causing a dry up in the liquidity of the repo market, it doesn't necessarily, I wonder how, it wouldn't necessarily, the finger might not point to them if 2 years later it says, oh, well, this bank or that bank or whatever needed the liquidity. It may be just that normally J.P. Morgan might have provided that liquidity, and by withholding the providing of it, which maybe is an action of omission rather than of commission, it might still not point a finger, smoking gun directly. Even what I was really coming down to is 2 years from now, are we going to know the whole truth and nothing but the truth, or is this still going to be a mystery forever?
Not from the Federal Reserve notes, I would venture. Minutes of meetings and stuff. We may or may not learn of it from the developments that occur in the fullness of time. Even then, I kind of doubt myself that all this is going to come out. I have a feeling this is the kind of thing where it's in the vested interest of both the Justice Department and the U.S. government and J.P. Morgan separately not to reveal all the bloody details of what may be going on. So I don't have a high degree of optimism that my speculation is going to be proven categorically to be true, but that's just the nature of the game. It's in everybody's vested interest not to admit stuff like this. So we'll see what happens.
Okay. Turning our attention to some viewers' questions that were submitted. There's some related to this topic that we haven't unearthed yet. One from Retard says, will the JPM scandal show silver more important than gold in world markets?
Well, I don't know if it's going to prove that. I think what will happen is that you'll see ultimately and hopefully soon a much greater price advance in silver than you will in gold for a lot of reasons. One, it's a much smaller market, silver, compared to gold. Two, it's been more manipulated than gold. So just on a natural basis, you're going to see silver, I believe, vastly outperform gold, whether you want to how you want to interpret that as far as deeper meanings. I guess anybody is free to think about it however way they want. But I think that the bottom line will be that the gold silver ratio, which is close to 87, 88 to 1, is absolutely crazy. It has no business being anywhere near that. It should be much lower, meaning that silver should advance a much greater percentage than gold. So you can read into that whatever you want.
Related question here from both J.P. Morgan and talking about accumulations of silver, and then we're going to lead into a question following about accumulations by central banks of precious metals. But Rob Abro asks, how much silver do we know that J.P. Morgan has in storage?
Technically, zero. Is there any hard proof that anybody, myself or anybody else, can point to and say that J.P. Morgan owns X amount of physical ounces of silver and X amount of physical ounces of gold? And the answer is no, and that's deliberate and intentional on the part of J.P. Morgan. They're not interested in anybody knowing what they own, so they're going to cover their tracks via their army of lawyers and accountants and lobbyists or whatever to suit their own needs. So I can give you, reasonable analysis, speculation, data facts that show, in my opinion, that J.P. Morgan, owns in various ways and in various places up to 900 million ounces of silver and at least 25 million ounces of physical gold. Can it be proven categorically? No, it just can't. It's there's some things that you just can't prove categorically, and this is one of them.
The same viewer asked a follow-up question: is what are your information source or sources?
They're all public. I don't have any inside information. I don't have any contacts within. It's all public information. In the case of the silver accumulation that I claim by J.P. Morgan, I'm relying on COMEX, both warehouse statistics, which show that the J.P. Morgan warehouse opened in April of 2011. And had 0 ounces in it, and is now the largest warehouse in history in terms of holdings. It's up to 161 million ounces. I claim that J.P. Morgan owns another 100 million ounces in other COMEX warehouses, so they own 80%, 260 million ounces or so of the 316 million ounces total in there. It's easy enough for somebody to confirm, like the Justice Department or the Commodity Futures Trading Commission. They could either verify or rebut this allegation. So it's all public information. It's J.P. Morgan has taken delivery in their own name over the years of close to 150 of this 150 million ounces in futures deliveries is a record of that. I also claim they are also not the sponsor. They're the custodian for the big silver ETF SLV. And they've used that position to convert shares into non-reportable physical metal for years. We went through this before. They bought and melted down close to 150 million ounces or more of U.S. Silver Eagles and Canadian Maple Leafs. The list goes on. They're all public sources: U.S. Department of Mint, the COMEX, the CFTC, reporting data, and the Commitment of Traders and Bank Participation Report. All public information. I've laid it all out over the years, but nothing inside. There's no somebody whispering in my ear that they're doing this or doing that. No, it's all based on public sources that can be looked up, verified, etc.
Back to the topic of accumulations by others, we have a question from Hugh Sinclair who asks, I have a question for which I cannot find an answer. There is a buying spree by central banks, billionaires, etc., in physical gold, yet the price is not exploding. Now, the most given answer to this question is that the price is suppressed through the paper price on the futures exchanges. But why would a gold miner sell his or her gold at the low manipulated paper price when there is overwhelming physical demand and the miners are aware of this?
Well, basically, he has that's the right answer. You just maybe got to look at it a little bit differently. The price is set, on the COMEX by paper contract positioning over time. That has amounted to a suppression of prices, But it's important to keep in mind that there's only one price. The price is set, on the COMEX by paper trading, but that's the price that everybody else in the world, including all the mining companies, have to take. The price is made, on the COMEX transactions. That's where the price is made. Everybody else in the world, users, miners, refiners, investors, everybody takes what the price is offered to them, given to them, set by them by paper trading on the COMEX. It's absolutely insane. It's illegal. It's like every bad thing that you want to say, but it also happens to be reality. I'm not saying it's going to last forever. In fact, I know it's not going to last forever, even though I don't know when the manipulation will end. Okay, but it's absolutely crazy that a price be set by paper speculation, and that's all it is, on the COMEX on one exchange, and that price be transmitted and to every other aspect of physical metal. Everybody looking for a price when they're looking to buy or sell. You want to know what the price is. You're not making the price yourself. You're taking the price that is made for you by others. I'm just filling in the blanks and telling you who the others are that are making that price. All miners, when they produce metal, they have to take what the price is the given day that they're selling their production. It's not the miners that are participating on the COMEX. Be clear about that. The miners are not the ones who are selling short, or they're not involved on the COMEX whatsoever. It's a big misunderstanding on people's parts. They look at the Commitment of Traders report. One of the biggest categories of traders are the producer, merchant, processors, okay? And everybody looks at that and says, oh, that's the hedgers, okay, that mining companies that are hedging their production. Absolutely false. There are no miner participation on the COMEX. It's strictly paper speculators between hedge funds and banks, speculating banks like J.P. Morgan. The miners are, not a factor at all. The mining companies are not a factor at all. They just take what the speculators set the price to be, and it's nuts, but hey, that's the way it is.
A related question here from LS says, if so many powerful countries have been purchasing record amounts of gold, why didn't that break the manipulated spot price of gold?
Well, it's a good question. You want to further clarify, define when you say, spectacular increase. I mean, there is an increase, and central banks are buying more, gold than they bought in previous years. But if you look at a chart of how much more gold they're buying versus what they used to buy, it's not like a giant spike, and we've never seen, such an increase before. It's a gradual thing. It's not, it's not as spectacular, as the numbers, may indicate when you look at it and measure it over time. Gold is a big market. We produce, mine 100 million ounces every year, take out of the ground. Another maybe 20 or 30 million ounces gets recycled from previously produced gold jewelry, et cetera. It's like 150 billion dollars worth of gold is created each year, and the central banks are buying a decent size, percentage of that, but not crazy numbers that is enough to have changed the price. That can change. What's likely to change is that there'll be changes in the paper market, to where the people who have been traditionally snookered and taken advantage of on the COMEX, which are namely these hedge funds, these managed money technical funds, have been the chief victims of the manipulation at the hands of the speculating banks. And there are signs now that that's changing, and that these former losers may be turning the tables on their tormentors, the big speculating banks who we call commercial. So there is change in the wind that's out there, and all of a sudden the net result of that, if it's successful and continues, we're going to see a sharp spike in price, and invariably, it'll be probably attributed to things that are not really the cause of the price spike. The price spike coming in silver particularly, and also in gold, I believe is going to be related to the end of the paper manipulation on the COMEX, and not so much all the buying that's been out there. But I think all the buying that's out there is easier for the public to understand as a reason for why the price may have gone up, and that'll probably be the one that's most accepted. You don't always know the true story behind anything. It seems.
What mechanism do you imagine that the people who've been the victims of the manipulation are going to be able to overcome? That's different from just raw demand overwhelming the ability of manipulators.
Just to stop what they've been doing, which has been proven to be, so ineffective. Basically, what these technical funds do, and they're the prime driver of price on the COMEX, and the banks take the other side of whatever transaction these technical funds do. They have a habit, or they have a pattern of and a belief in buying as prices go up. Okay, through moving averages. They don't study the supply demand of gold or silver or any commodity for that matter, or any market. They just go by price action. And over the years, I'm saying the last 30 years or so, they buy when prices go up and sell when prices go down. They're looking to catch on to a trend, and they use moving averages, etc. Well, that's set them up for manipulation and abuse. Okay, because the banks, their commercial counterparties always know what they're going to do. They're going to buy on the way up, and then they're going to sell when prices come down. So the banks lay in wait. They feed them. They take the other side of the transaction. They know how these technical funds operate. They've been operating the same way for 30, 40 years, and so it's easy to figure it out. What I'm saying now is there are signs, very strong signs, that these technical funds, or a number of them anyway, may have wised up, may have realized that they're the sucker sitting at a crooked poker game table, and not knowing that they're the victims. And that I think for some reason it's dawned on them recently, based on their behavior. Okay, they haven't sold on this recent sell-off that we've had in gold and silver. We made the high in September on each of them. And since that time, we've come down in price in both gold and silver. There's several months now, and we've gone through all most of the important moving averages. And this would be a time when the technical funds who had bought and drove the price up into September would normally have sold by now, and in reaction to the prices coming down below the moving average. Well, something funny's going on right now. They haven't sold. And if they don't sell, okay, then the game will change completely. If these technical funds, or a good number of them, have wised up and realized that, banging your head against the wall is going to cause pain, and they just do the obvious, namely stop beating their head against the wall, and the pain will go away, then the whole paper game is going to change. And there are strong signs that may be occurring now. I can't speak with authority telling you what is going to occur. I can tell you what has occurred, and there's been a big change in the last several months. Whether these technical funds are going to continue to refuse to sell to the downside, as I'm starting to believe for the very first time, if that happens, then the paper game is not going to be what it was in the past, and it may be the end of the manipulation. There's reasons to believe that. This all has come about in the last since September, in the last 3 months or so, and so it's early on. But these guys, these technical funds, are acting much differently than they did before. And if they continue to act that way, then the whole price mechanism, the whole price discovery, the way prices are set, has changed. And boy, that's a really big deal if that's the case.
That's fascinating. Thank you for elaborating on that. It really was a benefit to all of us. It's related to this question from Rainbird, and you may have just put a nail in it. It said, Ted, you are tireless and true. Is not the 50 or even 100-year current low in commodity prices versus financial asset prices an indication that unlimited paper contracts can permanently destroy the true value of every commodity, especially silver? And it sounds like what you're saying is that requires the capitulation by the speculative funds that may not be playing ball anymore.
Yeah, no, I agreed with what the reader said. The only thing I would disagree with is the word permanently, okay? Because what I'm talking about, it has been permanent, it has been consistent up until now being the last several months. But there's something in the air that's not the air. It's in the actual positioning, the reports that you get from the Commitment of Traders, from the CFTC in the form of the Commitment of Traders report, is showing a change in pattern that I've never seen, and I've been following this thing for at least 35 years or so, and I wasn't expecting it, but it's happening, and there hasn't been the degree of selling that we normally get from these technical funds, and if that continues, that means the game has changed. And I'm very excited about it. I can't guarantee that these traders that haven't sold will not sell on lower prices. I guess that's possible. They've always sold before. But it might be. The biggest question I've had for years has always been, why do these guys keep doing the same thing? Why do they fall into this pattern of buying as prices go up, selling as prices go down, and getting taken to the woodshed continuously by these big speculating banks? When are they going to wise up? I used to defend them and say, well, they're not going to wise up because they've been doing it for so long. But something, I don't know, something in the air, something in the water. This time it's a little bit different. And as you pointed out at the outset of this discussion, there's a lot of things that are different that seem to be changing nowadays. And this should have changed. This should have happened long ago. These guys, these technical funds, should have, realized that they were on the short end of the stick, for all these years and decades. Never did, and now it looks like they may be, and that's a very big deal.
Interesting. We've been talking about the buying and selling by individual companies and that sort of thing, but if we could take a look at the broader picture of the quantity of metals that we're aware of that exist investable. Stark Side of the Moon asks, just this past fortnight, I was made aware that the total above-ground supply of physical silver does not account for jewelry, whereas gold does, which obviously skews the data and makes the total above-ground amount of physical silver seem a lot less than gold, contrary to what the recently learned fact. Do you agree with this? And if so, why is this the case?
No, I think I know the report he's talking about where someone was claiming that there's 20 times more silver than above ground than we think that exists. And, I haven't commented on the report until now. I don't accept it at all. It's almost silly. The fact of the matter is we have very hard and detailed statistics every year, of how much silver is recovered from recycling. If you want to say jewelry is a small component of that, because silver jewelry is different than gold jewelry. Gold jewelry is like an ounce of gold. Gold is $1,500. An ounce of silver is like $17, and so there's not. It's not the same comparison, but more to the point. We know what we get from recycling each year in gold and in silver, and we know that when the price surges in silver, that recycling is going to increase, okay, by a certain amount. It increased in 1980 when the price went up for the first time to $50. It increased a lot then. It increased in 2011 when we went back to $50, but it didn't increase as much as it had in 1980 because there was less to be melted, and that's going to be the case now. It's to speculate on how much silver might be out there in the world and potential scrap is basically a silly exercise, because we have hard data showing how much silver over the years, many years, we get from recycling, and it doesn't change that much. So if there is all this massive amounts of silver out there in the form of jewelry or scrap that hasn't found its way to be recycled by now, what are these people waiting for? I think it's a figment of someone's imagination. It's a waste of time. We get, roughly 150 million ounces of silver every year from recycling from all sources, and jewelry only makes up about 15% or 10% of it. In silver, it makes up a lot more, 90% in gold. It's not going to change that much. The report, was garbage.
It's interesting. You brought me back. I was right back there in high school. Because every time I would get home from high school, there was the newspaper on the step of the house, and in the 1980s, around 1980, and it was saying, these big full page ads saying we'll buy your silver dimes and quarters and half dollars and that sort of thing, and they kept saying how many times face value they'd give you, and the number kept going up and up and up, and it was a big public thing that people were talking about, a big phenomenon in the culture. And you said that flushed out a lot of potentially reclaimable scrap and junk and whatever silver out of the economy. And then I think we can all remember 2011 when every strip mall and in the big malls and little shop fronts up and down, there was kiosks and there was people, we buy gold, we buy gold, we buy gold. It was just this big public phenomenon. So you're right. If those peaks didn't come up with materially significant amounts of additional recycling that really moved to hold the price down, because the price kept going up even despite those. That's something that's in all of our memory banks that we can refer back to as data points. As you say, why do you expect that there will be more significant amounts of silver that never came out at those times?
Yeah, no. We have the numbers. Back in 1980, I'd say it was a phenomenal amount. It was like, I think, 500 million ounces of silver came out of the woodwork, teapots and things like that, knives and forks. Okay, we went from basically in 10 years, we went from $1 to almost $50. Okay, and that flushed out 500 million, 500 million ounces of silver came onto the market that wasn't there. 30 years later, in 2011, the same run-up in price, not from $1, but up to $50, brought out, and we have statistics for this, brought out 100 million extra ounces. Okay, so we went from 500 million extra in 1980 to 100 million ounces when we got to $50 in 2011. Let's say we go to 50 or 100 again. How much more is going to come out? You can only melt your stuff once. Once you get rid of your old teapots and knives and forks and coins and stuff and melt it, okay, you can't come back and melt it again in the next big silver boom. So there's a law of diminishing returns here, that as less people don't they don't make things with silver that we used to make 100 years ago, knives and forks. Now it's kind of rare. Modern brides don't want to polish, okay, silver knives and forks. It's just it's not in keeping with modern times. Not that we don't still sell silverware, okay, but the kind of stuff that we sell nowadays at the new higher prices for silver compared to where it was, 30, 40 years ago, it's not coming back to the market anytime soon. No one's melting down a Tiffany silverware set that they bought in the last couple of years. It'd have to go to silver would have to go to $500, $1,000 an ounce to get that stuff out. And if that's the case, then who cares? What, are we going to worry about how much scrap may come out because the price of silver is at $50 or $100 or $200? I say let's get to those prices, and then we'll worry about how much silver comes out of the woodwork.
You really made a light bulb go off for me just now when you gave us the facts about the quantity that actually got flushed out in 1980 and then the much reduced quantity that came out in 2011. And I thought, that's another example of past peak silver or past peak gold. ER asks, what are your thoughts on the peak silver/gold debate?
Well, I mean, I think that, we got more and more people in the world, okay, not so much consuming silver as jewelry, so much that, I guess there's some of it. It's just that the ore grades are down for everything, whether it's petroleum or copper or gold or silver. We've basically taken, the easy stuff from the ground, the richest ores and stuff like that. So we're not making more, silver or gold ore or oil or anything like that, and we have more people consuming in different ways in all our modern devices and appliances and conveniences. So yeah, I mean, there is a peak. I think that's what I think of when I think in terms of peak, either production, whatever. We're going to keep consuming. Consuming is not the problem so much is producing enough stuff that can be consumed. It's like that seems to me to be the the main formula.
Right. We've had several guests on talking about this long dry spell in precious metals prices has dried up investment in exploration and in development of existing assets and produce. So we just have this huge lag curve, and that the characteristic time constant that it normally takes to bring new discoveries into production and new production into really being online and ramping it up is so long that there's a potential for a big disparity of supply and demand should the demand increase, because the supply just isn't as elastic as that. Absolutely.
And then, when you take into effect, either you believe it or you don't believe it, that the price has been manipulated as long as I claim it has. That certainly hasn't helped, as you said, in bringing potential new supplies on. It could take 10 years from the time you discover a greenfield ore body in silver by the time it gets to actual production. And we're talking about things can spike up as they did in 1980 and as they did in 2011 in a much shorter time frame from that. And you're not going to get any relief from, massive new, production increases and stuff like that. It'll be over. It may be over in a flash. It can spike up and spike down. You got to be ready for the spike. That's the problem. You got to be there, before the spike, and then not overstay it. If it's truly a spike that in price that's not going to last, we haven't gotten to that yet in silver. I think it's coming.
You had brought us into the discussion of where silver and gold prices might go and how long they might stay there. Can you talk to us about what you believe to be the most realistic scenario in terms of a an increase in price, how fast it might move, how high it might go, and how long it might stay there. And one of the things you already mentioned was that if people think that they can wait until they see that it's happening or happened and then make their move, it may happen way too fast for them to be able to acquire any gold and silver at that time.
Yeah, I mean, I think that's the right approach would be if you think something like I think silver's dirt cheap, okay, because of an artificial price constraint, this COMEX paper trading positioning up until now. If you think it's grossly underpriced, then you're only kidding yourself to think that you should wait until you see some kind of concrete sign that it's about to go, because if it goes for the reasons that I suspect, and that remains to be seen, that the manipulation breaks, okay, we're not talking about a gradual process here. We're talking about there's going to be like boom, it just ends at some point. Maybe there's some faint signals that you see that are things that are different that I kind of see now that are happening that might serve as some kind of warning or prelude to what might come. You want to position yourself, before the event actually takes place, because if the thing does what I think it's going to do, which is namely explode in price, it's like to wait until it starts is you may be waiting way too long. There's no reason why silver can't jump, many dollars an ounce in an instant, in a day certainly, or whatever. So the problem is if you wait for it starts to move, you're going to be paying perhaps way up, and human emotion being what it is, saying, I'll wait till it comes back a little bit, then I'll buy it or something, and you wind up missing the whole move. On the other hand, if you are positioned correctly beforehand and the thing does spike up as I would expect at some point, then the question, if you're fortunate enough to be on board, as this is happening, you don't want to overstay your welcome and miss an important top if it spikes up, because generally things tend to spike, okay, and then come down before you know it. I don't think that's the biggest worry right now in silver, because it's been depressed and manipulated for so long, decades, okay, that I can't foresee how the initial price explosion, whatever that may be, $5, $10, $20, $30, whatever, is going to be the blow-off in a very short period of time, weeks or months. I think we're going to need some time to rectify the decades of mispricing. So I wouldn't be so concerned about selling, the minute it starts to explode, only because it's been depressed for so many years that it just can't, satisfy all those years and decades of price suppression with a move that may, be measured in time-wise in terms of, say, weeks or months. It might take years, and it's that's a problem we'll deal with. If it's let's knock on wood, let's hope it's a problem that we're faced with in the relative near future.
Ted, we've been hearing a lot about the Santa Claus rally in the stock market, but another publisher recently put out a chart showing that 10 out of the last 11 years, the precious metals have rallied from approximately December 15th, which is the day we're doing this article, this interview, until the end of the year, or even into January and February of those years. Are you anticipating an end-of-year rally in precious metals at this time?
Yes, but I have to confess, I anticipate an end-of-year rally every year, so this year is no different for me.
We've been speaking with Ted Butler, legendary silver analyst and founder of ButlerResearch.com. Ted, before we let you go, can you stick around for one more question for our Patreon supporters?
Sure.
Hey, and those of you who are not yet supporting our channel on Patreon, if you are receiving value from this service that we're providing, please become a supporter. Help us to do this. Help us to reach people who haven't heard of some of this information and these concerns. And you know there's a lot of people, probably most of the people that you know, haven't heard this stuff. You'll help us to keep that message going out there by going right now to patreon.com/reluctantpreppers and pledging any amount, but particularly $10 or more per month will be meaningful in helping us to be able to continue to do this. So Ted, as always, thanks for joining us here on Finance and Liberty and Reluctant Preppers.
Thank you. Thank you, Tony.
They say the stock market crashed today.
Yeah, I heard that.
Sounds like people's retirement accounts and savings accounts are going to get bailed into the banks.
Yeah.
Looks like pension plans and Social Security are going to get suspended too.
I know.
Sure, I'm glad we decided to put our money into gold and silver instead.
Me too.
Get your first ounce of silver at spot price and free shipping on any order over $99 at sdbullion.com/RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.